Welcome to the Prospecting Today podcast. Today we have a great guest, Dr. Lawrence Yun, who is the Chief Economist for the National Association of Realtors. And we're so grateful to have you on today, Dr. Yun, because so many people are worried about this economy, especially realtors during this time. So what are your thoughts as it pertains to realtors and what's going on with this government shutdown?
Thanks for having me on the show. And you are correct to say that we have this economic shutdown imposed by the government. So a large parts of the economy essentially to say stay at home and therefore the other businesses simply cannot open. And we are seeing already in the very high unemployment insurance claims, 3 million a couple of weeks ago. That is unheard of high number. Then the following week, it was 6 million. And the latest number shows another 6 million. So quickly off the top, we are looking at 15 million Americans filing for unemployment insurance claims. And it will have a very large negative off the chart figures in the second quarter for all economic data, whether it is the GDP, unemployment rate, and naturally home sales, vehicle sales, everything will pretty much come down quite measurably. But the key question is the following. When will the economy come back alive? When will the government essentially say the health risk related to the virus is over? And if there is when there is a rebound, how strong is the rebound? So I think those are the key. We know that the numbers on the second quarter will be awful. Third and fourth quarter, I am hopeful that we can recover most of those losses, maybe not fully, but most of those losses. So for the year as a whole, that we have a sort of manageable figures for home sales, and home prices is something different. I think it's going to hold on very steady.
Okay, very interesting. You did bring up second quarter. Do you think April's going to possibly be the worst of the second quarter, or do you think we're in for something really bad in May and June as well?
I think it all related to the health conditions and how long the stay-at-home orders are in place, and whether or not there is a miraculous vaccine being discovered quickly. So there's a lot of uncertainty, but I think people also need to ask this very simple question. Once the economy is open, will there be a strong demand for, say, daycare centers? What about hair salon? So if we believe that these businesses will need to open, then we could have, like 8 million job creation in a single month. Again, unheard of, but positive direction. And similarly, some industry like cruise ship, they will be lagging behind for quite some time. But I think a good portion of the economy is ready to bounce back quickly.
Do you believe that we are heading towards a recession, and kind of what is your technical perspective of that? Are we going to enter into one?
The GDP decline in the second quarter could be as down 20%. These are unheard of numbers, even far deeper than, say, the Great Depression that even in the 1930s, much deeper than the Great Recession, at least for a short time. So the question is it going to be lasting, or is it just a simple little blip, even though it is a major blip over the economic radar screen? So however one wants to define whether technically is that I believe that the economy was quite strong before the virus. We hit a wall. We are coming down off the cliff quite quickly, but how fast are we going to recover? So however we want to define recession, depression, strong rebound, I think the key is what happens through this volatility. And I think for most of the home sales that will be missed during the second quarter will be made up in the fall and winter. Now, spring buying season is always the most active, so we are going to miss the spring buying season. And some of it will be just shifted, hopefully, to autumn buying season, but not all, because the reason for the spring buying season is families with school-age children wants to make that move before August or before September, before the school year. And some homeowners may decide to say, well, I'm going to wait another year before listing. So we will not fully recover the lost home sales. But I think the home prices will be very stable, unlike the stock market, from the simple fact that we don't have the housing market misalignment that took place 10 years ago. Subprime lending, we don't have. Also, overbuilding by the builders, we don't have that today. And therefore, home prices should be very stable, which is a very comforting news for most middle-class families because they have their majority of the wealth tied to housing equity.
Right. And I like how you touched on the '08 housing market crisis and how this is different. How is it different compared to the Great Depression, the dot-com bust, and what happened in 9/11? Are we in any of that territory?
So the housing market is quite resilient through the economic downturns. The only exception is 10 years ago, the subprime-led, artificially inflated housing market. But you look at the 1970s recession, throughout all that period, home prices actually increased. Even the 1980s recession, when the mortgage rates, I know that some of your listeners may be very young and not understand that mortgage rates average 18%. I mean, even during that time, home prices actually squeezed out a slight gain. The 1987 massive stock market correction, home prices still increased. In the aftermath of the 9/11, there was a desire for more single-family homes and away from, say, high-rise multifamily for a brief period. But home prices still increased throughout the 2001 induced recession caused by that horrific 9/11 events. So housing market is quite resilient. Only time was that subprime lending, and hopefully we don't have that, and hopefully we will not have that situation, in the anytime near future.
So you don't see housing prices coming down as a result of what we're going through?
So the government stimulus plan, also we have to remember, this is a massive figures in terms of government spending. And I think the government is also well aware that people who are filing for unemployment checks, this is not their fault. The economy was strong, they are working, and suddenly they say businesses have to shut down. So they want to compensate for this. So the spirit of the stimulus package is for those people who are getting laid off, that their income will be fully almost compensated. Now, for some people, the unemployment check will not fully compensate, but the federal government is in essence saying $600 plus what the state offers. So for some individual, they may be receiving, say, $1,000 per week. And that should be able to cover most of the lost income throughout this phase. And for small business owners, they're also getting many temporary loans, which can be turned into grants depending upon circumstances. So I would say for the real estate brokers, real estate agents, realtors, to seek out this what's available, because I don't even like the term unemployment insurance. I call it disaster relief that was imposed by the government, and during this temporary phase, seek out those assistance.
So how will real estate agents possibly be able to benefit from this type of recent legislation, like you're talking all this stimulus money getting pumped into the economy?
So for a business owner, certainly apply for small business administration loans. Now, I know anytime the government program is revealed in a very speedy fashion, there will be little bumps along the road. Maybe some of the local banks are not ready to handle it, but they put the system. So just go to the website. NAR, National Association of Realtors, also provide a lot of information. And for people who have lost income, in the past, unemployment insurance was only available for people who had been on a payroll, not independent contractors or self-employed. But now it is available. So seek out, and some states may not be fully adjusted to this. So if you are denied the first week, apply the second week, because they are trying to readjust their system to assure that independent contractors also get relief.
Are you sensing that this type of stimulus will get some real estate agents to drop out of the industry in order to claim some of these benefits? Are you worried about that kind of happening?
Well, I mean, the stimulus measure made it clear that the independent contractors, meaning that people who are realtors, they're very entrepreneurial. Their business activity has significantly declined, and they sense that the economy or the home sales will return back to normal, say, later part of the year. They don't have to drop out. I mean, they can still claim unemployment insurance. There's no criteria to say you have to drop out in order to claim. Because again, the spirit of the government stimulus is that it was government imposed economic shutdown, and we will do everything we can so that once this health pandemic is over, we are back to normal.
Yeah, makes sense. So you're not worried about real estate agents no longer working after this situation or realizing that maybe this isn't the right field for them?
Realtors are quite resourceful. But we also find is that they're using more technology, whether electronic signatures, the virtual tours, or if it requires in-person visit, is private showing with very minimal contact to say, please don't touch anything at home, but one can visually see it. So even the appraisal process, right now the government is permitting only exterior appraisal, so one do not have to visit inside the home. And realtors are indicating that with the necessary social distancing, they can get the deals done. It varies by state, like Virginia permits people to actually visit homes, while Pennsylvania does not. So we see some state-by-state variation, but the realtors have adjusted, and we also have to remember the real estate industry is quite entrepreneurial. Even in a normal time, you have a 15% of realtors who do quite well in terms of earning six-figure commission income, while 30% are very challenged. I mean, they want to try out, but even in normal times, sometimes the fit is not there between what one needs to do in real estate versus trying to find clients, even in normal times. So you will see that some realtors through this pandemic crisis do very well or hold on much better, while others essentially may be looking at maybe this is not the right profession.
Right. Do you expect the government to introduce any more stimulus into the economy at all? Are you expecting anything like that?
Well, before the pandemic crisis, one thing there was a bipartisan agreement. Interestingly, Washington, everyone think people shout at each other in Washington, but they wanted to get the infrastructure spending done, whether it is for bridges, highways, that's trains. But more importantly, in the light of the pandemic crisis, the rural area remote Wi-Fi and other high-speed internet access. So I think this will be laid out as part of the infrastructure spending, which means that more jobs will be needed for all the building of the bridges, laying out of the internet, high-speed internet through the rural areas. So again, additional stimulus to get the economy going.
Are you expecting any NAR members to struggle with paying their dues this year? Are you guys having any plans in place for some that might struggle with that?
Well, in any businesses, some people will struggle with it. But for NAR membership dues, it is one of the lowest of any industries. And I think, people who understand that real estate, they want to try out, is very entrepreneurial. And people are saying, well, the fees are quite nominal. And I think most people understand the low fee comparison to other professions. And so if people are choosing not to pay that small nominal membership fee, I think, that is also indicating maybe the profession was not what they intended to be. But even in this pandemic period, we still see people coming to take real estate courses, wanting to be realtors, people who have been recently laid off. They are trying out something, and maybe some people believe that they can really succeed in real estate. And surprisingly, many people actually wind up being succeeding. So there's always dynamism in the industry of people coming in and leaving.
Right, absolutely. We are hearing early reports that mortgage delinquencies are on the rise. How much longer can this go on before we start to see an increase in defaults and pressure on lenders?
About 60% of the mortgages are backed by government, meaning through Fannie and Freddie and for FHA mortgages. Now, for typical consumers, they don't know whether it's backed by the government or not. But for government-backed mortgages, if they run into financial hardship during the pandemic, they can postpone mortgage payments. In other words, they get a forbearance. And whatever missed mortgage payment will be just tacked on towards the end of the life of the loan. This is, again, completely different from subprime mortgages where it was funny mortgages, no income verification, people overstretching. People are very sound. And given this forbearance possibility stretched out for 6 months or even up to 12 months if people are needing it, I think we will not face any large foreclosures. Certainly, temporary default, or I should say temporary delayed mortgage payment will be there because of the current situation. But I think given the structure to say just tack on at the end of the life of the loan, most people will not be facing foreclosures.
Yeah. So what do you consider the biggest variable economic factors that you're watching over the next month or so, and why?
Well, it's really about jobs. So we know that the second quarter would be quite ugly in terms of job numbers. But then third and fourth quarter, there will be job recovery. And maybe we do not get that 100% recovery of all the jobs losses, but it will be a good portion, 80 or 90% of the jobs will be recovered. So I will be looking at that. And the other part that I will be looking at is this historically low mortgage rates. I mean, mortgage rate being so low, once people are back on their jobs and they see the market condition, to say, wow, this is historically low mortgage rates. Furthermore, we are also hearing that people with secure jobs, and these will be maybe 70% of the population, people working in the government, education, healthcare sectors. Many are saying that, well, mortgage rate being so low, even in the pandemic period, they're actually searching for home, perhaps sensing that there is less buyer competition. Prices were rising very strongly, but now with the prices essentially stable, maybe some people with secure job wants to take advantage of the low mortgage rates and also the fact that there's less buyer competition.
Yeah, I think you hit on an important point there, secure job. And I'm wondering, even though people might even though their jobs are more than likely secure, I'm wondering if consumers feel secure with their jobs in the current economic outlook and everything. So I appreciate you addressing these questions because I think there is a lot of nervousness about that. And then I'm kind of curious with the low mortgage rates, interest rates, is it creating kind of a housing bubble in terms of like super high cost when it comes to buying a home?
Well, low mortgage rates always expand the buying power, so one can bid up the prices a little higher. But I expect this low mortgage rates to be in place for quite some time, probably over the next 2 or 3 years. But the reason for the rising home prices is less to do with, I would say, interest rate, but more to do with lack of home building that the industry faced over the past decade. We have a housing shortage. So if we want to address housing affordability, then we have to just simply build more homes. And building more homes, by the way, would be a nice boost to the economy as well. So some localities where they have been somewhat sluggish or reluctant to issue housing permits, if they want to get their local economy going, issue housing permits because there is a housing shortage, particularly for the starter home mid-price points. Upper end market, there's plentiful supply, but I would say that the vast bulk of the home buying is on the mid-price point, and we need to build more homes.
Gotcha. So it seems like COVID-19 has started knocking down a series of dominoes, like you were saying. Many of the dominoes, like the stock market or the jobless claims, are very visible, but it seems like some of the dominoes falling might be less visible. Do you see any other dominoes falling as a result of this pandemic that are less visible to the average consumer today that will have substantial consequences in the near midterm?
I think, there would be some permanent changes after the pandemic. I think people will say that virtual tours. There will be increased demand for the virtual tours. So in the past, people used to visit maybe 10 or 15 homes, physical visit before deciding. But now they will do mostly through virtual tours and do physical visit only maybe one or two as a final confirmation before deciding on the home. So I think that will be more permanent change. The other is the social distancing, and I think even holding open houses, there will be a lot of sanitizers available for people coming and visit. But realtors are always trying to look for what the clients need or what the clients' comfort levels are, and they are adjusting to that. Regarding one, I think perhaps sort of positive long-term outlook for housing is that they will sense that housing values, which is so important for that middle-class wealth, that remains stable throughout the pandemic crisis, and people will feel comfortable in terms of maybe we should buy a home, not only in terms of place to live or maybe a school district, but it's also a source of stability for financial wealth.
Okay, and what does a recovery from the current situation look like? What do you expect when you see us get through this and our stay-at-home orders are lifted? Will there be a recovery, or will we be entering into a longer recession or worse possibly?
I think that most of the homes that are not being listed, in other words, there are a few homes trickling in and being listed, but it's certainly not the spring buying activity of number of sellers coming on. But that will come, I think, hopefully late summer, once assuming the health crisis is over by then. And so there will be a return of sellers as well as return of buyers. So there will be more transactions, but maybe not the transaction activity level of what we saw pre-pandemic. So maybe it could be, say, 5 or 10% lower activity compared to what it had been, but it also depends on the jobs recovery. So again, just emphasizing, if one believes that the restaurants will reopen, hair salons will reopen, dry cleaners will reopen, we are looking at massive number of job creation once the crisis is over.
Okay, wonderful. So does that change your economic outlook if we have stay-at-home orders that go on for 4 more months or 6 more months?
Yeah, certainly. It's going to just postpone that recovery for longer period. So longer this stay-at-home order is in place, that the recovery in the home sales will take a little longer, because I think most Americans are patriotic, meaning that if the government says stay at home, even though they want to buy a property, I think they want to say, well, I'm going to wait until everything is all clear. So they are awaiting for that all clear signs.
Yeah, absolutely. So do you know if there's future tax implications for the trillions of dollars being pumped into the economy right now that consumers need to be aware of or possibly prepare for?
Where is the money coming from? Have the massive stimulus package, running up large government debt, rising deficit, and also the Federal Reserve, separate from Congress and the White House, independent. They are printing a lot of money to provide liquidity to the system. So all this money floating around means that for any other country, it means higher inflation. You print money, you have higher inflation. U.S. is in a very fortunate circumstance where people demand a dollar when there is an uncertainty. So dollar is strong, so that is taming any inflationary pressure. But say many years out, maybe it's 4 years, 7 years out, we may have a little higher inflation than what we have been accustomed to. So recently, the inflation rate has been about 2%, meaning the consumer price inflation. Now, say 7 years from now, it could be normal to have more like 4% inflation, given the amount of printing of the money as well as large budget deficit the government is running.
Yeah, so in wrapping this all up, if you had a family member who was a real estate agent, what advice would you give them?
I say, first, be resourceful in terms of changing consumers' habit of viewing homes. And many realtors are already doing that. So things like virtual tours, explain to them about the electronic signatures, that many things can be done without physical contact. And second is that the real estate market will recover, just as the economy will recover. That pandemic phase is not a permanent situation to depress the economy. We are running into this major speed bump, turbulence, but we will come out of it. So I would say just hang in. And in the meantime, most of the home sales, even in normal times, are based on referrals and past clients and recommendations. So keep up contacting past clients about their needs. Maybe they could refinance, provide information in the current phase. So just keep in touch with their past clients.
So your message would be, don't stop prospecting. Continue to work during this time.
Oh, absolutely. I mean, this is not a downtime. It's a different type of activity that people need to be pursuing.
Okay, wonderful. Thank you so much for your insightful information. I think that people hearing you will feel a lot more confident that they need to continue working, that things are going to all work out. And I really appreciate that mentality and just that mindset coming from you, Dr. Yoon. Is there anything we've left out that you think is important for real estate agents to understand?
I think we cover a lot of angles. And thank you, Kimberly, for having me on the show.
Thank you.